Let's also welcome Nirmal Jain, Chairman at IIFL and chartered by the fundamentals of the market. Nirmal, hi, morning. What do you make of the cautious mood in the markets post the outcome of the UP polls, and how serious are the concerns of reforms stalling from here onwards?
In fact, market has been a bit disappointed because most people are expecting Congress to do much better, and then if, say, SP government in UP were dependent on Congress support, then they could have bargained their support at centre and probably would not have been as much dependent on Mamta's support, and who has been very difficult to handle in terms of reform process. But I think there are two schools of thoughts here. One is that Akhilesh and Mulayam, they also have won the election based on development plank, and they basically played the development card, and therefore government populist measures have not worked much. So there may be a lesson or a message for the government that now the growth and development agenda is more important, because people are looking at means of employment rather than just the subsidies, grants, or some money which is just given away. So there is a view that now that government has realized that they did everything possible in populace in terms of Narega. They talked about food security. Those things have not worked. So they might get back on development and growth track, so which may be positive. But the market correction is also for a few more regions, which is, if you see globally also, markets have been correcting, and obviously they are not impacted by Indian political conditions. But after that last bailout of Greece, there has not been any further news for market to sustain rally. So markets have been lackluster, and they've been correcting in the Europe and other markets as well. So I think it's a global trend, and so India has been part of that. But other than that, market will now look forward to RBI's credit policy on 15th of this month, and then the budget on 16th. So FI investors are looking very curiously now that whether Congress will now succumb to more populist pressure, or they can do something more pragmatic, more growth-oriented, and take some decisive measures to bring the fiscal deficit under control.
Hi Nirmal, Nikunj also joining in. Nirmal, at these levels, what exactly are markets pricing in from the credit policy? Do you think a possibility of a CRR cut and a rate cut, it is already baked in?
I would say 50-50, because while the liquidity position has been such that most people believe RBI will at least do a CRR cut, which is more likely. So I think at least there's a 70-75% probability that CRR cut will happen, but market probably maybe 50% of market would have taken the cut already, and that's very likely. And I think the indications towards rate cuts, say even if that happens in April, but some indications towards that will help market a lot. Now that growth numbers have been very bad, because there's only GDP growth has been 6% odd in last quarter, which has been a bit of unpleasant surprise, because government people and policymakers were still expecting that it may be 7 or near 7, but that has not happened. So there's a tremendous pressure on the central bank also to make sure that they don't do something which hurts growth further. Of course, inflation is there as their key agenda, but if inflation is caused by factors beyond control of monetary policy, then at least they will look at growth. So CRR cut is a good probability. My personal opinion is quite likely to happen. But whether market has factored into or not, I would say, again, is a probability. Some people have factored in, some people are still skeptical about it.
Nirmal, so what according to you are the critical factors that you would watch out for in the upcoming budget?
Upcoming budget, I think we are watching out for fiscal deficit numbers and the underlying assumptions, because optically somebody can say that fiscal deficit is under control, and you can have presumptions about tax revenue or expenditure which are unrealistic, or even for disinvestment. Then obviously the foreign institutional investors, or who have analysts and fund managers who are very well qualified and experienced, they will see through it. So I think in the budget we should look out for fiscal deficit, the underlying assumptions which should be realistic, and whether government can muster some courage to control subsidies, particularly say for urea subsidy, or even the diesel and other things, and whether they take whether they keep their populist expenditure of Narega and these other measures under control, and can take some decisive steps to control subsidy. I think that is what investors and market are looking forward to.
Nirmal, so which large cap stocks to your mind they now officially qualify as buy on every dip?
No, as I said, that these stocks, select stocks in telecom, IT, banks, pharma, FMCG, so stocks like ITC, Sun Pharma, Telco, they look good.
Nirmal, the fact that crude prices are refusing to come down even though global demand is strong, do you think that is a big irritant? And on paper, if crude trades above $115 or $120 per barrel, it is impossible to make a bull market case?
No, it's a matter of great concern because India's most of the problems are linked to crude oil. It's the largest item on our import bill and fairly inelastic demand. And so it basically impacts our current account deficit. It also impacts our fiscal account deficit because a significant part of price increase, government has to take the burden as subsidy and they are not able to pass it on to the consumers. So crude oil is a very serious problem if the prices remain high. But I'm an optimist because we have seen that China growth is slowing down. After the first time in recent past, China has forecast 7.5% growth, which is much lower than their double-digit growth what they have experienced in last 2 decades. Developed market growth is coming down, so crude oil prices, logically should not remain at very high level. There are issues with Iran and some geopolitical problems, but I think that they may get over. So as we get into second half of the year, probably the things will ease. But from India's fiscal macro point of view, I think that is the most serious concern. Is concern number 1.
Nirmal, so any themes or stocks you would keep on your radar from the budget expectation point of view, wherein the outcome could be favorable?
No, one should look at the corporate tax, excise duty, and companies that will be directly impacted. So, if there are diesel vehicles and companies are impacted by this. I would say that, in today's market, macro variables like fiscal deficit, they work a lot more for overall market rather than the individual. When maybe 10 years ago the duty rates used to make a lot of impact, but I think now they come down and the variations are not so significant. But if the excise customs duty variation, then you can look at the sectors that are directly impacted. If there's any change in corporate tax rate, then obviously high tax paying companies like FMCG and full tax paying companies will be impacted.